active like from day one of Facebook. But you're always gonna try out new ideas. You gotta just stick to your plan.
Kunal, Bulls on Wall Street. I personally think I love their colors, the green, the black, the good logo. So, in my opinion, okay, and I've been around for a long time in this like trader community world. Bulls on Wall Street has the most jacked staff of any trading community there is. Kunal's in good shape, but everyone look at Tim. So that's Kunal's right-hand man right there, Tim. You see those pipes? That's Tim. So, anyways, you know, they're down from Detroit. They spend time between Detroit as well as here in Florida. Kunal's been trading for the better part of 16 years, ever since the dot-com boom and the dot-com bust. You know, he's had his ups and downs. In the mid-2000s, Kunal started his chat room, you know, started online. Since then, he's been able to create what I feel is a very impressive business, which is Bulls on Wall Street. You know, they're one of our friends in the community. We definitely don't look at them as like a foe or competition. You know, we're all here to help people become better traders. Bulls does have a different strategy than Tim. However, there's several ways to get to to financial success. So Kunal's going to be teaching a lot of that today. I'm thrilled to have him for 45 minutes. Kunal has a great room of traders. He has Mary Beth, which I'm sure she's a lot more pleasant to look at than Kunal, however. Anyways, guys, please get up for Kunal. Come on board.
Pardon me for 1 second. I always lose my voice every one of these conferences. Holy crap, there's a lot of people here. Let me tell you something, just about 6 years ago when Tim did his first one, there was like 13 of us. There's like 4 dudes with mustaches, 2 Asian guys, and like me and Tim, and there was just nobody left. The next year there was 50 people, and we started getting an inkling that this was gonna turn into something, but what's come about is actually really impressive. It looks like there's hundreds on hundreds of people here, and I'm sure we could have packed it a lot more, but Tim has done an amazing job with this business and the community that he's built. I've got a good presentation for you guys. I think you guys are gonna really like it. I wanna really congratulate you guys, first of all, for coming out here and taking an investment in your future on actually learning to trade. It's a little bit scary, right? You know, I bet a lot of you guys snuck over here and you probably didn't even tell your friends and family, right? Because if you told them you're going to a penny stock conference, I mean, you're better off saying you're Jehovah's Witness or something. You know, I used to do that all the time. Like, I'd go to these conferences. I was much like you guys. I'd come to these conferences and I had that thirst to learn. And I had no clue what was going on. Like, you know, it's like, where do you start? What do you do? And my mom would be like, where are you going? Like, see Tony Robbins. She said, of course. I mean, I'm working on myself. You know, because it was just such a small community at that point, and Tim has really kind of brought this thing to the forefront and kind of made trading stocks cool. You know, which obviously us day traders, we're usually in our house, we're not really that cool. So congratulations, there's just never been a better time to start in this industry because there's so much information out there, and you guys are really on the forefront of what we're trying to do. You know, we have a guy here from the Netherlands. I mean, think about this. A Netherlands guy, this is his first time in America. He came here and took a chance, and he really came here to learn something. That's a huge leap of faith, and it just shows kind of what this is all growing into, you know. Poor guy, though, his first time in America, he's got to come to Orlando. It's like he's by himself, he can go to Disneyland and take some selfies, and back to Netherlands he goes. So hopefully we'll get him out of town. But let's get into what we're doing. So you're at this conference, probably a lot of guys. How many of you guys have been trading for less than 1 year? Okay, most of you guys. So you're probably wondering, what the fuck do I do? Like, you know, I got all this information. There's all this YouTubes and Snapchats and all this stuff. How do I get better? Well, when you think of trading, think of this as a job, right? This is your profession, or you want it to be your profession. So this is no different than being a doctor, a lawyer, an accountant, whatever, right? This is a job. So if you wanted to be a doctor, how would you go about and do it? Do you just pick up a couple books and then next thing you know you're making money? What does a doctor go through before they ever do their first surgery? There's the time spent, the investment, the blood, sweat, tears, the self-doubt, those late nights. And once you go through all of that, guess what? At the end, you do your first surgery. And even then, you're not the best, right? Now you're just in the game. And trading is the same way. Sure, we're not going to let you study here for 10 years. But we've got to take those years of knowledge and compact them in a very, very short period of time. And so it's intensive. But you've got to go and attack this like it's a university-style education. So you got to go out and figure out, first of all, what you want to do. What kind of trader do I want to be? Am I a day trader? Am I a swing trader? Somebody holds for multiple days. Am I an investor? Whatever it might be. Okay, now I know what I want to do. So now I've got to learn every single thing about that particular style of trading down to microscopic detail. So now you've got this recipe of what you want to do and how you're going to do it, right? You've bought some classes, some DVDs, whatever. So now you've got it. So you got to memorize it, of course. You got to memorize it and learn it. But to get good, to be in day trading, right, when the lights are on and things are moving really, really fast, how can you react so quick? Well, you've got to come down and repeat and repeat and repeat everything you've learned till it's down to muscle memory, right? You ever think about like shooting a basketball or something like that? How do you do it? Right? You have to sit there and shoot a basketball tens of thousands of times. But what happens once you're done is you can do it without thought. And that's where we need to get with our trading is how do I, instead of being reactive to the market and turning on the computer at 9:30 and having this paralysis by analysis, how do I get away from that to turning on my computer and I'm seeing things like the fucking Matrix, right? Because that's what real day trader does, right? How do you think Tim just day trades in his pajamas all day, right? He's not really thinking about what he's going to wear. I mean, he's just going, right? He's doing what he does. And that's what's going to be the hardest part for you guys is to get to that point. Because in trading, you're literally, when you turn your computer on, you're analyzing a trade, you are looking at dozens upon dozens of variables at any given moment that you have to compute in an instantaneous second to make a decision. I mean, can really any of us do that for anything? No. So we have to dumb things down into routines, into patterns that we can memorize and then we practice over and over so that it becomes muscle memory. So today I want to tell you about how I trade, and then I'm going to give you some patterns from front to back on how to find these stocks and then how to do them. When you think of trading, I want you to really dumb this down like this. Think of it as like a recipe, okay? You know, if you ever want to bake a cake, what do? You'd open a cookbook, and right, there's not missing steps. There's every single thing you need listed in the order that you need to do it. And if one thing's missing, guess what? Your fucking cake tastes like dog shit. Well, trading is the same way. If you miss one piece of the puzzle, one piece of your recipe, your trade is going to be messed up. This is a game of inches, or pun intended, a game of pennies. You can't mess up even one single thing. So when you come into this conference or you watch these presentations, I want you to think about this. Okay, there's a pattern. Somebody's teaching me something. Now, what's the recipe on actually how I find the stock? What type of stock I want to trade? How do I enter it? How do I exit it? How do I manage my risk? How do I sell it? Right? These are the basic dynamics of a trade. And so any single thing that you do or any single trade you ever take, those are the things that you have to think about. So I trade momentum stocks. I don't care if I trade a penny stock or dollar stock or $100 stock. It doesn't really matter. Momentum is momentum. And the reason for that is that I'm looking for range, okay? I'm looking for momentum. If a $50 stock goes to 60, that's great, it's $10, right? It doesn't really matter if it's a dollar stock that goes to $1.20 or a $50 stock that goes to 60. Actually, what's easier to trade? What's easier to capture a few dollars out of? A stock that goes from $1 to $1.20 or a stock that goes from 50 to 60. What's easier to capture a few dollars and get your piece of the puzzle? Probably the stock with a bigger range, right? It's a lot easier to take 200 shares and take a $52 stock with a dollar stop loss and take $3, $4. When you have a really small stock, sometimes you don't have the range. Now, if a stock is going supernova, you will have the range, but that doesn't happen every day. I like to trade every day, so I'm willing to trade anything with momentum. So every day, stocks will explode out of just nowhere, based on a PR, some type of catalyst. It can be literally anything. As an active day trader, swing trader, I'm searching for that type of momentum. So how does a momentum start? Momentum starts with a catalyst, right? Some type of fundamental catalyst, a PR, which is a press release, some type of earnings. You know, stock comes out, Twilio, Google, whatever it might be, they have really, really good earnings, and it's a surprise. And so now people are scrambling, and a stock can go parabolic. So when we look for these type of stocks, I personally don't care what the PR says. I've got a 3rd grade reading level. I sucked in college. I went for 6 years. I do not have a master's or PhD. Reading is not my thing. But a few basic things of a PR is it's going to add something that's positive about the company. Or it's going to remove a negative cloud. You know, a CEO got arrested for some type of fraud, and he's found innocent. It removes a negative cloud. Positive. A biotech company has a new drug out. Positive. These type of things can help a stock go up. Now, oftentimes these stocks may be just sitting there, or they're in a downtrend, and positive PR can actually reverse a stock that's been in a downtrend for a long time. Now remember, the exact details doesn't matter because we're not fundamental traders, right? If you're going to hold a stock for a day or 2 days or 3 days or 4 days, really what's inside the PR doesn't matter. Now, before we get into actually how to do these, I want to talk a little bit about time frames, okay? So a lot of times stocks with news come out, they start to gap, they start to make a move. When you think about trading, I want you to think about the cleanest charts, okay? When you think about trading, you want to think about the cleanest charts at all times. So we're looking always for stocks that are making new moves to highs or coming out of some level of base. But before we can get into that, if you're a day trader, not all patterns are created equal, okay? So anybody ever traded a flag pattern, like in the middle of the day and it looks really hot and it doesn't work?
Yep.
Right? Anybody trade some type of short consolidation middle of the day and it dies? Well, why is that? Well, in trading, guys, there are 3 different types or parts of the day. And each part of the day requires different patterns. Where a lot of new traders will screw up is they'll take a pattern that's meant just for the open, and then they try to trade it in the middle of the day. So you may have a stock that's consolidating for 30, 40 minutes, and you think, wow, this thing is really hot. Look at this flag. Well, if it's during lunchtime, there's a good shot that that pattern doesn't work, because that particular type of pattern is just used for the open. The open, I consider anything from 9:30 in the morning to 11 o'clock. The open is about price discovery. You ever see stocks just cruise up at the open, first 2 candles, they just spike up? The open is about price discovery. A PR comes out, a stock doesn't really know where it wants to go. It doesn't know what its equilibrium is. The stock is searching for price. And so that's where you get the really emotional spikes up and down in a stock. And that's where you see that crazy action. But you won't see that middle of the day. The open is about that price discovery, price volatility. And so that's where you'll often get those big, quick spikes. Now, middle of the day is your digestion period. So that's your 11 to 1 period. During the middle of the day, stocks are about consolidation and retracement. Stocks are like people. They've got to rest. The stock has a big spike up at the open. Guess what it's got to do? It's got to chill a little bit. It's going to retrace, allows fresh buyers to emerge, or it's going to consolidate and get some rest so it can build up some power into the close. And then end of the day is when a stock will pick a side. It picks a direction on where it wants to go. So this usually happens after lunch. Okay, so that's your 1 to 4 p.m. kind of move. That's your power close. So each one of these parts of the day require different patterns. And they look vastly different. And what you always have to remember when you're trading is what time of day it is and what should a stock do. You know, stock is spiking up and then it's middle of the day and you're like, wow, I should buy this thing. Well, remember, you can only buy it if it consolidates or retraces because that's what's going to happen 90% of the time. And that's where we need to go in. One of the things that happened to me all the time when I was new is I learned these cool patterns and I would be trading them like end of the day because I made the same decision in the beginning of the day and it would work. You know, I'd buy it and it would just die and I would just think, oh, breakouts fail. And people always say like, well, 50% of breakouts fail. That's true, but that's because they don't actually match when they should be working and not working. There are certain times a day you don't do breakouts, you just buy the pullbacks. And so understanding this will kind of help you supercharge your trading performance.